Okay, here we go. So we are almost in the middle of the day, and we had this. Look at this craziness. Look at this huge wick for selling pressure, and then followed by a huge wick of buying pressure. This happened right about at the open of the market. Yeah, this is the opening 15-minute candle of the market, and this is like 30 minutes later. This is a 10 a.m. reversal, right here. I think. Yeah. Yes, technically, yeah. 9:30, 9:45, 10 a.m. So this is something that I look at it, and my initial reaction was very mixed. First, I was surprised that when price broke out of this range, this little range that we see on the 15 minute, that it got bounced back right at the 500. Now, I guess if I looked smaller, is there a zone here that I can use as a way of okay, my charting broke again, of course. I hate this freaking. Oh no, I guess not. Okay, no, never mind. Okay, so there is a zone here on the 5 minute, right? So drop base. Look at this. That's a really pretty 5 minute candle. But I don't look at the 5 minute candle. I don't look at these small time frames because it's too much work, and it actually interferes with my larger trading plan. But it doesn't mean that it doesn't work. It is effective, but it just doesn't fit with my like schedule and stuff. That's why I choose to not do it. But this is a like I won't lie, I felt a little bit of FOMO here because I was like, oh man, that was perfect. Um, so this little zone right here held up very nicely. Perfect textbook quarters trade right at the 500. Um, Even though it was breaking out of a range, typically when it breaks out of a range, I look at ways to buy. So if I was looking at it, I probably would have gotten faked out if I'm being perfectly honest. I'm like, oh look, it made a new high. Momentum is high. Obviously, this is on a 5 minute, so I wouldn't draw any of these conclusions. But assuming that this was the candlestick pattern that we saw on like an hourly or something, with bigger time frames, I would have been like, oh cool, look at this bullish engulfing candle. Uh, Let me look for buys. Let me use this area right here, of strength to buy. Oh, that happens to be the 425. Let me enter a 425 buy order right here, and set stop at the usual 350, which is right here, and I would have gotten destroyed um, with that. And so there's part of me that is feeling FOMO, and then there's another part of me that's feeling JOMO, joy of missing out, because that would have been. I mean, you know, I can be honest enough and self-aware enough to recognize, like, yeah, that would have been something I took, and I would have gotten faked out for sure. The next area though is down here at the 250. You have this angle, this not angle, this candle, and this bullish engulfing. Obviously, I'm still on the 5 minute. I should get off of this thing before I bias myself any further. But on the 15 minute, it looks like this. This is just the Nate. These two candles right here just sum up, uh, for me, the entire year for this market. Like, crazy selling pressure, crazy buying pressure. It's just a war, right? The buying pressure comes from all of the leftover stimulus dollars that are still out there not being used yet, and the buying pressure comes from the fundamental, concerns and macroeconomic uh, uncertainties for, well, especially in America, but also globally. But this index is obviously an American index, so it's like, mostly for America, macroeconomic, uncertainty, debt ceiling stuff, rate hikes, etc. Inflated, or inflation, period, but also inflated corporate earnings, all that kind of stuff. The fact that there's only a handful of tech stocks that is holding the market up when every other stock pretty much is making new lows, 52-week lows. And so there's just so to me, the Bears have a case, but the Bulls also have a case. They don't have the Bulls don't have a case. They have a lot of ammunition. The Bears have a case, have the stronger case to push the market down. But the Bulls have a lot of leftover ammunition to keep the market up. This is a summary right here. A picture is worth 1,000 words. These three candles sum up for me the entire year. Okay, but what am I going to actually trade? So I am kind of looking at I kind of don't want to do anything right now because this movement up and down is just too fast. It's too slippery. And I can't really get a grasp on what's really happening here. Maybe if I was better at tick charts or volume charts or something, which I've heard of, I see the value in, but I've never really bothered to learn or master. It's part of my whole okay, that I don't have time for that. I don't want to get that technical. I want to stay away from the charts as much as possible. I want to figure out a way to trade less but still succeed. And so that's not something that I wanted to take on. But I know that in a situation like this, that is another angle, another layer of analysis that you can do, where you would be able to get a lot more insight, maybe more specific insight, not just price, but the other attributes of what drives price, like volume and order flow, which is that's probably the number one. Order flow is the most important. Clearly, there's an imbalance of orders at the 500, and as there was at the 250, well, all the way down to even the 200. I would say, yeah, the 200 even. Look at this. The low on this broker is exactly 200 to a T. Exactly. Now, I'm not saying, on another broker it would be probably different, right? Because there's a spread, but that's how close this thing is. That's how powerful number psychology is. 200 being a minor level, which is something I kind of overlook because the major quarters are bigger levels than minor levels, and because the value of this index is so large, right? It's the oldest index in America, so the number is the highest. The major levels and the major quarters are more significant than the minor levels and minor quarters. But 200 is a minor level, and that is completely valid, and it just demonstrated its strength right here. 500 is a major quarter and a minor level at the same time, and that held up. That showed its strength in terms of being resistance beautifully here. So that's the other. These two candles also demonstrate the strength of number psychology, right? The market is still driven by as much AI and algorithms and computer trading there is out there. It's still driven by people, because people feed it the data, and people have a bias towards round numbers, whereas algorithms do not. And at least for now, that's still showing. It's still showing that it's the case here. Again, I don't know. I'm very hesitant to put on a trade right now, but if I were to put on a trade, I would probably play this one, this candle right here. Even though the movement above it, there's no real strength coming out of this, and it's also technically just a retest of this larger wick candle. So you can argue that the volume has been used up. All of the imbalanced orders have been used up by these two wicks. And so I'm very hesitant to put this on. Not only that, there isn't that much room to complete a whole quarter. So I have 325 here. Um, if I wanted to play this candle, it would be a 325 entry right here, and the 575 would be my take profit. But in order to do that, I have to overcome this wick. So I don't know if I want to try to attack that necessarily. That there's not, you can't really tell. I mean, this wick was definitely the market open, so it's definitely regular trading hours, but it doesn't mean that it's necessarily strong because it's in the opening 15 minutes. There's a lot of orders settling and everything like that. So this could be strong or weak. Like we don't really know. Um, it typically I would consider something like this stronger than something like this. Something that happens during the Globex session. Uh, but still, it I'd have to overcome it. Overcoming it is still a concern, and I'd have to make a new high above this in order to hit profit. Um, so I'm very hesitant on that, but I have no other choice really of a good trade. So what I can do in because I'm uncertain, I'm gonna trade accordingly, and um, I'm gonna place. I'm gonna take the trade that I just said. Just like that. And do the backup order of that, of course. Okay. So now I'm playing the 250 and the 325. Even though I'm not that confident in it. And I'm just going to play the range on the other side. I'm going to play the 5. Uh, well, I'm going to have an alert here at the 500 because if this continues to go up and not pick me up from the 325, because basically the other reason I'm uncertain about this is I've already missed the boat kind of. It's by the time I looked at this, these two candles had already formed, and then I had a meeting and stuff, so I didn't really come on stream to kind of do an in-depth analysis. But I had already missed the boat on the 250 here twice by the time I opened the charts this morning. So uh, I'm not sure that it'll hold up again. It could, but that's like the fact that it's already used up orders makes me less confident than if I were to have just done a set and forget down here to play this. That probably is something I should have done over the weekend. Probably should have done something like that. Um, Actually, no, that's not true. Well, actually, yes, it is because I'm confusing myself because I'm on a such a small time frame. So this right here on the hourly time frame being my bread and butter. I was looking for some divergence, which I kind of got from on the lower time frame, but I don't really get it here. But here I do get this, so it's like okay, I'll give it a shot. But again, I missed the boat already, which is you know it's a trade weakener number one, not an enhancer, and number two, there's not as I'm seeing strong resistance here. There's not that much runway for profit if I'm going to get picked up on the 325. So that's the other issue. So I have to just be very alert here. I need to know that whether the price hits my entry for 325, but I also need to do the opposite. I also want to play the 500 more than I want to play the 325. That's just something that's more closer. I want to play the 500. So put that there. Stop loss is 575. And the profit is 250. So with this, make it closer. If I hit the 500 first, I will probably take off this 325 order because I'd be trading against myself. But if I take the 320, if I get triggered on the 325, I probably will not take off the 500. If you can see there's like a combination of a hedge with a bias there, for this case. So, those are my two trades for the day. Took a while to get there because I just need to talk through the uncertainty of it all. But we'll see what happens. And I'll